Hello and welcome to the Weekend Investing Daily Byte. We are shooting this episode on 29th of March. We are coming to an end to the financial year. Tomorrow is a holiday, trading holiday for Ram Navami, and there'll be one uh, more session after that on Friday, and that is the end of the financial year. A financial year that we would like to forget because the entire financial year has resulted in virtually no major moves in the market. Uh, on the higher index, also, I would say that no major moves on the downside as well because Nifty currently is just 10% from its all-time high. So from that perspective, Nifty has not fallen, but the average stock in on the NSE, if we take more than 1,000 crores of market cap, that I think average is down about 40%. So from that perspective, the market has bared some pain. Uh, Last many sessions, you can see here almost 10 or 11 sessions, we've been stuck in this range, and the last four sessions, especially, uh, you had inside bars. An inside bar is when the entire day's range is encapsulated by the previous day's range. So you had Friday's move, and then the Monday's move was almost within the Friday's move, and then Tuesday's move was within Monday's move, and today also till about 2:30 the move was within the previous day, but then in the end it did break out. So this is encouraging to the extent that at least this congestion zone has gotten broken out, and hopefully on Friday or next week we will go and challenge 17,200 at least, and of course if the continuity is there, then we may go and fill this gap also, but that is a bit far fetched right now. This is currently can be seen as a relief rally, a dead cat bounce, a pressure release system. A lot of folks were waiting for some sort of gain to come through, and that has come through today. You can see the heat map today is all green virtually, uh, despite Reliance being down at 1.5% at one point in the day, closing at minus 0.59%. Bharti Airtel, Asian Paints, the other losers. But other than that, you will see mostly green. State Bank, Bajaj, Twins, Axis Bank, Kotak Bank, uh, in the IT, TCS, HCL Tech, Wipro, auto stocks, Maruti, Tata, Mahindra, iShares, Bajaj Auto, all green. Cement and steel commodities all green. Power green. FMCG green. So a good relief day, and of course Adani stocks racing ahead after denying the allegations from the Ken report yesterday, based on which they had fallen. So, a good day from a market perspective. We can see that almost all sectors were flying high, 0.5% or more. Only energy sector was reeling at 0.1%. PSU banks leading the charge along with real estate and metal. So and autos. So these four sectors, PSU banks, real estate, metals, and auto, we have seen that this is sort of the risk-on sector where these are the first to get off the mark whenever market makes a move up. And of course, the correction is also there in these stocks, in these sectors ahead of others. So today, on today's sort of U-turn, PSU banks, real estate, metals have raced ahead. This has erased most of the losses that they had in the week, and overall, a good day from the entire sectoral perspective. In mid caps also, from the very start of the day, you can see that opening is the low of the day. So it didn't really go below the open, so it opened and started to go up, and having traversed two previous sessions, and half of the third session also, is very very positive. Actually, this breakdown that has happened below 29,600 has now been nullified, and hopefully we can again come to this congestion zone. So small caps are doing all right. So mid caps, small caps also, opening is same as low, and trying to make it up. So a bit lesser than the mid caps, but is significantly decent performance, almost 1.5 to 2% up. And Nifty Bank, as I've been saying in the last many uh, episodes, that Nifty Bank is not falling, and in the last 3 days also it was not falling, and today again opening was same as low, and it went above the previous 3 days high. So from that perspective, uh, Nifty Bank remains the fastest moving index. Uh, in terms of the large and mid cap strategy performance, you can see the Nifty up 0.8, Nifty 50 also up 0.8, CNX 200 up 0.8%. In terms of weekend investing strategies, MI India Top 10 up 1.3%, NNF 10 up 1%, MI Evergreen doing very well at plus 2.1%, and NG 50/50 also up 0.6%. In mid and small cap strategies, mid and small cap index moved up 1.7%, MI20 racing ahead at 2.9%, MI50 also up 1.9%. Within pure small cap strategies, small cap 250 up 0.1.7%. MI20 remained very dull. There's very high cash on this strategy, so it will take time to pick up stocks as the momentum goes up. But MI35, a rotational strategy, zooming ahead at 3.1% for the day. And within the all cap segment, CNX 500 up 0.9%, and most strategies gaining almost 1%, with MI all cap at 0.5%. So a good day overall for most strategies. One insight case study that I wanted to share was on EKI. This stock went from somewhere close to 100 rupees to 3,000 odd rupees, almost a 30 bagger from May 2022, 21, I'm sorry, May 21 to about January 22. So in about 9 or 10 months, this stock gained 30 times. And I was just going through some past data, and there was a presentation, investor presentation made by this company in August 21. And I went through this presentation, and this tweet link is there. You can go through it, and it's a beautiful presentation with so many x of profit growth, so many x of EBITDA growth, and the potential of the company, so on and so forth. So I think this entire rally that came around was built on that narrative that got pushed out to the public here, and it just went through to the moon. And since then, since beginning of 2022, it has been falling, and it has now fallen down almost 85%. So the lessons are plenty in the market. This is just one case study. There are hundreds of such cases where the narrative built around these stocks becomes so powerful that a person is not able to justify why they're buying it or have any plan of action when they should be getting out. So in all these situations, the momentum strategies help a lot. At least they will exit at some point and not keep you waiting. And if you have entered early, then the rally upwards can also be very, very meaningful. So this is something that discretionary investors should incorporate in their strategies. That yes, you may be identifying good stocks and they may be doing 10x and so on and so forth, but how do you get out? I mean, you cannot keep waiting for this, and this has entirely now demolished whatever gain that had come, and I suspect that a lot of people would have come in above 1600 when the euphoria was really high. And despite there being several supports getting broken, people are still waiting, that the narrative is still not changed about ESG and about carbon credits for this company, etc. So must have exit plans, must have proper strategy, must have the concept of what to buy, when to buy, how much to buy, and when to sell. Very, very essential for all practical purposes. Spotlight for the day for me is State Bank of India. It has broken a small trend line. It is going up beyond 2 to 3 days of price action, which is always positive. Volume is also up. So I think that one should keep this on the radar and look for trading setups on State Bank of India. I think State Bank of India is one stock which usually you will find is leading the market. So if State Bank of India is going up, you will find that Nifty is following suit. Or if State Bank of India is going down, because it is the leading indicator of the economy. If State Bank of India is not doing well, I mean, the rest of the economy, you can pretty much assume that is not doing well as well. So with this, I'll come to an end to my presentation. I'll just quickly go see if I have any questions. I had some questions rolled over from yesterday also. Let me just go see if I have any questions today. So I am not seeing any questions for the day. So let me go back and show you this chart again for the Nifty. And my sense is that once 17,200 gets taken out, I think that will really set up a good rally towards this gap area, and possibly a small gap area here. So 17,600 to 17,800 is something that we can look forward to once we convincingly break out of 17,200. But in case there is some headwinds from the global markets, and there is some pressure of FII sales, etc., and this support gets broken, then this becomes a huge flag for the downside, and there will be very deep repercussions of that. So so far, I think given that tomorrow is a trading holiday for Friday, I think 17,200 looks good. But of course, over to the overseas market for how they perform on this. So thank you so much for this joining me on this session, and I'll see you in the next one. Bye.